S&P 500.
It's your boy Jimmy. Jimmy.
Now, what's worth doing is worth doing for money.
Straight from y'all street to Wall Street.
Anybody tells you money's the root of all evil doesn't make up happen.
Dudes wake up, hope their girl turned on so they can get a little bit. Only woman in the morning I want to turn on this Becky quick. While the average man looking at this sad life. She fine as it. I'm over here looking at tails and whips like, yeah, 5'6". I left the mayhem for the market. Now I don't want a dope spot, I want a stock pick. I know that booty got dry, triggered my stop losses, but I ain't got time for your wop. My V-Wops crossing. Rich with hot V's and pushing hot keys. Strategy and plans to make grand. Still in my wife beater. Batman pajamas, house slides, and about 5 hot picks for the day. Cause I like the way the Dow bounces. 4 hot dips on call, so I got options. 2 with a lot of volume, 1 with a double bottle. Now I know dumb money don't understand. Am I talking about my trade or just thinking with my MACD? You see, we different in the way we move. You move with kittens and your dog, I move with bears and bulls. I got a green thought, grow with the marijuana. Waking up with the fun, open up some commas. Jump out of bed, make profits. Eat my bacon and eggs, make profits. Light up, watching them can make profits. While I'm still in my sand, making profits. They used to watch me move them packs and stop. Now I watch moves in the NASDAQ. Profits. Used to run from the ATF and them cops. Now I run down ETL, make profits. I jump out of bed, make profits. Eat my bacon and eggs, make profits. Light up, watching them can make profits. While I'm still in my sand, making profits. Yeah. See, me and Jim Cramer been talking mad money. Said today I'm taking a risk. They got the feds coming, but I got support here with me. I call a short squeeze. You get the drop, she pull the trigger and abort these. If she stay on my watch list, I might have to wife her. But I know better. I'm a true trading group lifer. Call up the Wolf of Weed Street. It's time to flip some profits. Go ahead, be hawking. Get your spot here. I'll double top that in the head and shoulders. Hit him up with this resistance. Watch him roll over. Cause I see John Wicks in contract. If I say I make $1 million a day, well, that's a large cap. You moving average, that's why you get crossed. Get split, get delisted, and knocked off. And I'm setting the whole block off. I'm buying GameStop and selling them roadblocks off. Jump out of bed, make profits. Eat my bacon and eggs, make profits. Light up, watching them can make profits. While I'm still in my sand, making profits. They used to watch me move them packs and stop. Now I watch moves in the NASDAQ. Profits. Used to run from the ATF and them cops. Now I run down ETL. Hey, my family. Hey, go, what we doing, my man? Hey, make profits. Hey, Shug, Mike, what we doing? Hey, make profits. Yo, Wolf, Professor, what we doing? Hey, make profits.
That TTG money gang,
making profits.
We some snipers.
Hey, yo, what's up, everyone? What's going on, folks? Welcome to the True Trading Group live stream. My name is Michael Edward Parinati. I go by Michael Edward. I'm the co-founder and head trader of True Trading Group. In case you guys didn't know, we are a Benzinga FinTech Awards finalist for Best Data Analysis Tool and are currently the fastest growing and highest rated premium online educational platform that combines university level training and investing courses with premium stock market tools, live workshops, individual mentorship and coaching on stocks, options, crypto, and futures. We day trade, we swing trade. We also cover long-term investing. There's literally something for everybody here inside of True Trading Group. When you guys join TTG, you get access to around $15,000 worth of education tools and resources that have already helped thousands of TTG members, no matter how much money they had, how much experience they have, or how much time they had in order to reach and be able to help those people to be able to reach their goals. When you guys join, it's an all-inclusive membership. You're going to get access to all of our courses and all of our tools. You're going to get our simplified version of the training program that I received when I worked at a fund in New York, beginner courses and advanced courses. You're going to learn about chart patterns, technical indicators, short selling, swing trading, options, advanced options, futures, even a course that teaches you how to do your taxes. And of course, my favorite, trader psychology, which are my absolute favorite courses. But you're going to get access to all the different moderators and their trading styles as well. TGD is not just me. There's 8 professional full-time trading mods that are with you each and every single day, calling out their trades, answering questions, providing trade alerts when their orders execute, sharing their screens, and talking and answering questions through each and every single day from pre-market into the close. You're going to get day trading, swing trading, scalping, options, futures, core trading, and also long-term investing. Not to mention all the tools you have access to. The reason why we were a finalist for the Benzinga FinTech Awards Best Data Analysis Tool is because We've taken all of the best trading and investing tools in this industry, and we've brought them all underneath one roof at one extremely affordable price for you. It saves you $5,000 or $6,000 a year from purchasing these things on your own. Some of these tools include TradingView's premium charting software, Benzinga Pro's real-time newsfeed, a simulator from ET&A, unusual options activity, dark pool data, options flow, short data, analyst ratings, congressional trading data, insider trading data, custom scanners, our TTG AI trading assistant, and so much more. We also get our supportive community, 10,000 members from 115 different countries, and access to our video library that has over 1,000 hours of workshops covering a variety of different topics, all with the utmost transparency and trustworthiness, knowing that the moderators and I submit daily records from our brokerage accounts right onto the website so you can see each and every single trade alert and trade execution that the moderators and I have made. The mods and I collectively as a group have been able to maintain a cumulative win rate on all of those executions of just around 80%, now going on roughly the last 4 years. We're 4.7 out of 5-star rated on Trustpilot with over 2,500 reviews with a 78% retention rate and a less than 2.5% refund rate. Now, that less than 2.5% refund rate has allowed us to be able to offer you a double your money back guarantee when you join True Trading Group. If you're unable to make back the membership fee throughout your membership, we actually give you back not just the fee, we give you back double what you paid to join our community. More on that double your money back guarantee a little bit later on during this live. Why should you listen to what it is that I discuss on this channel? Why should you listen to anything that I say here? It's not because I think I'm the world's greatest trader. It's because I didn't figure this stuff out on my own. I was trained by professionals on Wall Street. My very first job out of college, working at T3 Alpha Fund in New York City. They had me go through a training program before the fund let me touch $1 of their money. And then 2008 happened, and that was the big recession and this huge stock market crash. It was also the same year I received one of the firm's Trader of the Year awards. You fast forward now, and I'm the co-founder and head trader of True Trading Group, along with my team of 8 professional trading mods and over 30-person staff. We've helped thousands of people from all over the world to reach their goals. So if you're ready to learn trade and profit for real, you folks have come to the right place. 6 nights a week, Sunday through Friday, we go live on this platform, on this channel, where myself, other mods, and special guests drop golden nuggets, give you free lessons, education, trade ideas, and commentary to help you all become better traders. So if you've not yet done so, smash that like button, show some love, subscribe to the channel, turn on your notifications, make sure you guys never miss out on any of these live streams. What a day. Where's Gio? Gio, you here? I'm getting caught up to you, brother. What a day. Absolute massive day. Andre Zubko says, I'm sitting on a 6-figure gain on my long-term Apple holdings. What do I do? Are you trimming your Apple or are you holding forever? I am not trimming my Apple. I'm not trimming anything actually right where we are right now, even though I do believe that a pullback in this market is probably pretty close and it's probably right around the corner. I think that what we've seen over the last week or so is the market getting a little extended. We are overbought in a couple of different technical categories and a couple of different technical metrics. And going into the CPI number tomorrow with the big extension move that we had today, following the big extension move that we had last week, I would have actually preferred if the market did not do what it just did today. I would have preferred if the markets actually pulled back today going into the CPI number, and then the CPI number is good, then gap up and then continue its momentum. The big extension ahead of the number today to these all-time highs makes me feel that even if you were to get a lower than expected CPI number tomorrow and you got a big gap up in the market, I don't think that gap up is going to hold. I think with the extension that you saw today in the market, I think you run the risk of what is called an exhaustion gap. Tomorrow has the potential of an exhaustion gap. That does not mean that I am taking profits or selling anything in my long-term portfolio. I am not in sell mode. The only time that I've ever really been in sell mode was the end of 2021, because in my entire 18-year long career, I have never been more confident in anything in my entire 18 years of doing this that the markets were going to go down in 2022 as the Fed embarked on their first real rate hike cycle since prior to the 2008 recession. The Fed has never gone through a real true rate hike cycle since they cut rates down to zero during the Great Recession. They tried to raise rates a couple of times throughout. It didn't go well. They went back to cut rates back down like 2018. They raised rates. Then the markets dropped 20% in December of 2018. But inflation at that time was 1.7%. So it didn't matter. They were able to cut rates back down to zero, which the Fed did. The markets went to new all-time highs in 2019 after the Fed cut rates back down to zero. Going into 2022, you knew the Fed was not going to be able to cut rates back down, no matter what the market's reaction was going to be, because inflation was real and inflation was moving higher, and it was moving higher very quickly. So it was a very different scenario in 2018. You knew they weren't going to have the luxury to raise rates. The market's not like it, and then say, okay, never mind, we're going to cut rates again, like they did in 18 going into 19. They weren't going to be able to do that. So that for me was the highest conviction level that I've ever had in any market call in my career. And as a result of that, I sold my long-term portfolio really for the first time ever in my life at the end of 2021. I very publicly came on here in September of 2021 on this YouTube channel, and I told everybody that I was, from here on out, as the markets have green days, I'm going to be getting out of my long-term portfolio. Now, even when I did that, I didn't sell my entire portfolio, but most of my sales took place right there in the month of October. Okay, that was where I really sold in my long-term portfolio when I made that announcement there on this YouTube channel. And then the markets did what they did in 2022. And then we went ahead and I, again, very publicly on this YouTube channel inside of True Trading Group, I then bought back into the markets in May and again in June. So the money that came out of the markets here came right back into the markets in May and June. And now you guys can see where we currently are sitting now. So a nice little kind of, reload there at cheaper prices. The market's now ripping face up to 561. I do think that the market is getting extended here. I do think that we are getting overbought. I do think things are getting expensive. I do think that we are getting set up for a pullback in these next couple of months. I think you have the potential of going into the July meeting and the Fed obviously not cutting rates at the July meeting. And we'll have to see, if they end up cutting at the September meeting. Are they cutting at the September meeting because inflation is cooperating, or are they cutting at the September meeting because the labor market is softening to a point that they don't like? Now, I think the CPI number tomorrow is extremely important on where this market goes from here, not just because we're sitting here up at the all-time high, but I think that tomorrow's CPI is one of the most important CPI numbers that we have had in months. Once you had higher than expected CPI in January, February, and March, and nobody really cared. The Fed kind of brushed it off. They were like, yeah, it's just a little bit of a hiccup. It's not that big of a deal. Earnings at the time were much better than expected. The job market was still very, very strong. So nobody really cared that you had this little bit of a blip in inflation. Nobody cared because the labor market was still extremely strong, extremely tight. Unemployment was still 3.6, 3.7, and you still had very low jobless claims. You still had a surplus of job openings. All of that still looked great in January and February and March. Then you finally got, as you rolled into April and May and June, you finally got CPI numbers that started working themselves back to the downside. So everybody was very excited about that, and the markets began to continue to move higher again as earnings continued to be better than people had expected them to be. Now, the stage is changing. The setting is changing a little bit. The labor market is softening. It's still not falling apart, but it is definitely softening. The economy is definitely softening. It's still not falling apart, but it's definitely softening. And if you were to get another scenario where inflation becomes a pain in the ass again, like it was in January and February, let's say inflation ticked up like it did in January, February, and March. I think the markets reacted differently to that, because the labor market is in a different place now than it was at the beginning of the year. And the Fed was able to brush off the sticky inflation because we didn't need a rate cut. January, February, March, we didn't need a rate cut. When I say need, meaning the economy and the jobs market didn't need a rate cut. So the fact that the higher inflation was there didn't really matter because we didn't need the rate cut. So the fact that, that tells us that told us that data earlier in the year told us that the Fed's going to keep rates where they are for a much longer period of time. And we're not going to get 6 rate cuts this year like people thought coming into 2024. It was okay. Now you're getting to a point where if this trend in the labor market were to continue, people are going to start to feel like we need a rate cut. Now, if you need a rate cut and inflation is working its way down, then it's okay. If inflation is starting to work its way down and you're moving back towards that 2% target that the Fed has, then it's going to be okay. Because the Fed is cutting rates because they can, not because they need to. If they cut rates because they need to, what would that look like? That looks like the labor market is really weakening at this point, not softening. And inflation is still kind of remaining steady. If the Fed cut rates in that scenario, let's fast forward to the September meeting. Let's say that we get the July labor report and the August labor report. And let's say unemployment went from 4.1 to 4.4 between now and then. And let's say that inflation went from core CPI went from 3.4 to 3.2 during that time frame. And if the Fed cut rates in September with that setting, with that setup, I don't think the markets celebrate the rate cut. Because at that point, that then signals to the market, we're cutting rates because we have to, not because we actually beat inflation. So there's 2 different ways that the market can handle the first Fed rate cut. And the way that the way the markets take it is going to be, are they cutting because the labor market has softened and weakened to a point where they need to cut just to kind of, help out the economy without inflation getting down to where they want it to be? Now, you don't need inflation to get to 2% for them to cut. They're not going to wait for it to get to 2%. They'll cut well before it reaches 2% because remember, there's a tremendous lag on monetary policy. Okay, so the Fed has to, based on what's going to happen, 6 months from now. Okay. Oh, I thought I just lost connection there, but I think we're. Oh, I lost my train of thought. I just lost my connection there, first guy. Yeah, my connection is going in and out right now. My internet's totally fine. I think it's on Restream. We good, Joe? Can you still see me all right? All right, cool. Yeah, I don't know, guys. My internet's totally fine. I'm looking at it right now. I think it's just my connection to the Restream. Not sure what's going on right now. But sorry, guys. Now I'm choking. All right, we're good. All right, so yes, what I was talking about, they're not going to wait until inflation's back to 2%. They'll cut long before we get to 2%, but they need to feel confident that inflation is heading towards 2% and that there's no more bumps in the road. And if you still have an inflation read that's sitting at around 3%, I just don't think that is going to be enough of a sign for the market to say, all right, yeah, here comes the first rate cut. I think you're going to need to see inflation well down into the 2s in order for the markets to actually celebrate that first rate cut. So that's what it's really going to come down to. Has the unemployment rate gone up for the next 2 to 3 months consistently and steadily before the first rate cut, and has inflation just kind of stayed stagnant? That scenario of a rate cut, I think the markets don't like. But vice versa, if the unemployment rate stays steady for the next couple of months and inflation continues to come down, and then you get your first rate cut. I think the market's like that. Okay. And then the market's like that. So those are two different scenarios surrounding that first cut. And that first cut right now is priced in for September. And the reason why the market has it priced in for September is after the labor report that we got last week. The labor report last week was a lot weaker than was expected. And that's when the probability of your first cut in September spiked around 75%. So the markets have priced in the first cut in September. A hot CPI number tomorrow would negate that. A hot CPI number tomorrow, I think, takes you back to I think you have a pretty big red day tomorrow. If you had a hot CPI number, I think you would probably gap down maybe to 558 or so, and you probably get a wipeout candle that looks something like this. Okay, if you got a hot CPI number tomorrow. Now, again, we're prepping for tomorrow's CPI. I'm going to go over the expectations, everything else, what we're expecting, but I think you would get a candle that looks something like this if you got a hot CPI number tomorrow. All right, that's if you got a hot number tomorrow. Now, if the number comes in under expectations, you probably get a continuation gap up of this extension, but I don't think that gap up holds. I think either way, with the rally that we saw in the markets today, I think you run the risk of a gap up on a lower than expected CPI. I think that gap up actually sells. I think you get a profit taking type of day, and you can get something that looks similar to this. If you get a lighter than expected CPI number, I think you can have a big gap up and then sell it off by the end of the day, and you get this kind of exhaustion gap up type of candle. Something that looks similar to that. I just think that it's going to be very difficult for the markets to just do this and just give you another big follow through extension move. It just feels to me like we are a bit. Just feels to me like we are just a bit extended. All right, it just feels to me like we're a bit extended. So I think that coming into tomorrow, I am leaning, okay, coming into tomorrow, I am leaning on short activity. Okay. I'm leaning towards shorts tomorrow. Now that might sound crazy, but I'm leaning towards shorts tomorrow. What I'm going to actually look for tomorrow is if the number is lighter than expected and we have a big gap up, I want to find stocks that are weak and are not participating in that big gap up, because I think tomorrow you can have an exhaustion gap and then it would just be profit taking. It would not be some massive sell-a-thon. Okay. It would be a profit taking pullback. Okay. A profit taking pullback. That's what I think. And if we get it, I want to short stocks that are weak. All right. I'm still long Palantir. For those of you that have been following along, and I've been in this trade for a couple of days. It's been working out very, very well for us. We took a bunch of profit off yesterday above 28. We come right back in here today. And what I'm looking for on Palantir is to get flat tomorrow up here around this 29 mark. So if we get a candle, I'm looking for a gap up in Palantir tomorrow up towards 29 so I can take my final profit off on this trade. Why did I enter this trade in the first place? Excellent question. You take a look back here, pivot resistance right there at 27. That was the high of the day for us on Friday. We gapped above it on Monday. We pulled into 27 and right back into the 27. We then took the long. It was a nice trade. Support yesterday. We held that level again today as we continue to churn ourselves to the upside. So a lot of our members are in call options. I'm in the equity. Some of our members are in the equity, whatever it is. But I'm looking for 29 as my target. Where do I come up with the 29 number as my target? Let's go all the way back to September of 2021. There is a strong, heavy double top at $29.15. So right up against this $29.15, that's the target that I have set for myself on this trade. And I'm looking for a gap up tomorrow. If we get a lighter than expected CPI print, let's look for the morning gap. The morning gap, I think, is an opportunity to take profits on longs and then look to maybe enter some short positions on that extension in some weaker stocks. And if some profit taking comes into the market at that time, I think you can position yourself for some really good downside on weaker names as you finally get the pullback. Look for stocks that have not participated in this massive rally in the overall market. We've gone up, 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 up and away. We've gone straight up here for now the last 6 trading sessions, going back to last week with the holiday week. You're extending here on low volume. This is not a high volume extension in this market. You can see we have not even had a 50 million share day on the S&P. Not even a 50 million share day. Okay. The average volume that you should be trading here higher than that. You see some of these volume bars are bigger than that. We're floating around like a 40 million share day. 30 to 40 million shares has kind of been the average here that during this recent rally, 30 to 40 million shares. That's not a lot of volume. And I feel like positioning has gotten very overly one-sided. Institutional positioning, institutional sentiment, retail positioning, retail sentiment is actually the highest that it has been since when? Guess when? November of 2021. Let's go back to November of 2021 and what happened in November of 2021. Here's November of 2021. That was right around the market's top. Okay. That was right around the market's top. All right. So the fact that we're getting back to that type of sentiment and that type of positioning makes me feel like we're at a point where you're starting to, at a point now where I think the markets are going to get a little extended. We can get a little toppy, a little frothy, and then look for a possible pullback from there. What am I looking at here? Hold on, guys. All right. So that's what we are looking at there. Oh, and there goes Palantir, new high right now as we're talking. What happened? What just happened? You guys just all go buy Palantir. What just happened? Right? What just happened? You guys just step in and buy Palantir. But like I said, $29, that's the target. It's right up here. All right. So we're going to look to get flat in there. It's been a really great week for us guys inside of True Trading Group. I might honestly, we identified weakness in the software space. We had some monster shorts on Snowflake yesterday, over 100% gain on that. You had monster shorts on Salesforce yesterday into today, and that was around a 200% gain on that. You had monster longs on Apple. Okay, I was in. So for me, monster trade, short Snowflake. We exited that position for over 100% gain on the put option. Long Palantir, that's ripping face right now, new highs. You also had Uni with Apple long, huge trade for members. You had Shy with Salesforce to the downside. Again, about 200% gain, huge trade for members. It's really been, and then also AMD. AMD, I think Uni like a 300% gain or something like that on AMD, maybe even 400% gain on AMD today. Okay, so really what has been working in the markets and what's been working for us as a group has been the relative weakness in the software space, i.e. Salesforce, Datadog, Snowflake to the short side. And then you couple that with longs in the AI tech space, which is longs on Apple, ARM, AMD, Palantir. That's the AI/tech, long those, short software. And that's worked very, very well for us as a group. Again, there's 8 other professional traders that are with you guys inside of chat. It's not just me. So as a group, this week we've been short Snowflake, short Salesforce, right? That's software. We've been long Palantir, AMD, Apple, ARM. That's your that's your hardware, semiconductor chips. That's hardware, tech, right? That's where and AI, that's where the long side has been. I want to give a big shout out also, guys. Shout out Poker Go, Daniel Negreanu and Barstool Nate. Big shout out to those guys. Okay. Again, a big shout out over to Poker Go. Okay. Daniel Negreanu and Barstool Nate going at it Okay, some awesome stuff, awesome content, and you guys playing nice poker hands over there. So congratulations there. Big shout out to everyone over at the Poker Go channel, everyone that's tuned into this live, coming on over from there. Big shout out, welcome. Big shout out and welcome. All right. If CPI gaps Palantir, will you take profits pre-market? It's possible, Jimmy. It's possible, Jimmy. Depends where we get to. What I'll most likely do, Jimmy, is it depends what I see happening pre-market. I'll try to maybe wait for the open, but it's possible I could take profits. It's possible I could do it pre-market because I do have the equity. If someone is in the option, you're not going to be able to do that. You got to wait for the open. But if I do take profit, I'll break what I have left. I've got about 25% of my position left. I'll break it up in half and I'll sell about 12.5% of it pre-market, and I'll hold the other 12.5% and see if I get, a pop off the open. But nonetheless, I'm trying to get flat between 29 and 29.25. In that range, right above 29 is where I'm looking to exit this position and take my profits and go. Way to go, Jeff. Made over $2,000 today in chat with us. That's username Bluegrass Guy. Jeff, you've been trading very well, brother. You've been doing very well, Jeff. $1,000 of that was just on the AMD trade alone. Congratulations on that AMD trade, Jeff. Killing it. Jeff, you've been doing really well. I've been seeing your comments in chat. I've been following, you've been very active in chat. You've been following a lot of the moderators' alerts. And honestly, what it comes down to, Jeff is making money. And Jeff's not alone on that. Jeff is not alone on that. How many of my members are on this live stream right now? If you guys are making money, you're becoming a better trader because of TTG. Type the number 1 inside of chat right now. Again, if you're a member, you're making money, you're becoming better traders, type the number 1 in chat right now, because I know that Jeff is not the only one. The majority of our members are making money and becoming better traders. To prove it to you, go ahead, guys, type the number 1 in chat right now if you are a member of True Trading Group and you guys are making money. Now, if you're just tuning into the channel, maybe from the Poker Go channel, or if you're not a member of True Trading Group, you should be paying attention to how many people you see right here that are telling you I am making money because of this platform and because of this group. It is not just me. There's 8 professional full-time trading moderators with you every single day, notifying you exactly where they're getting in and exactly where they're getting out and when they're getting in and when they're getting out. So you can follow along with everything we're doing, no matter how busy you are. 82% of our members have a full-time job. If they can do this, so can you. We have a mobile app available that sends you real-time push notifications when our moderators enter and exit positions. That's how so many of our members are able to benefit and follow along with what we're doing, even though they're busy working their full-time jobs. Way to go, Andre. Made about $1,000 today. Yes. Ooh, 115% gain today for Susie. Yes, Howard killing it with Geo on SPY options. That's what I am talking about, guys. Hell yeah. I love it. I absolutely love it. Great stuff. Yeah, Palantir looks good. Looks good. Let's keep on pushing. We're gonna look to see if we can get that gap up tomorrow, guys. Looking for 29s. You can take that profit. Way to go, Gabriel Ferreira with $170 profit today. Happy as all hell, says Gabriel. There you go. I like it. I like it a lot. Congrats all. It's been a great week. It's been a fantastic week. We've had so many bangers this week between the Salesforce short, the Snowflake short, the Palantir long, the Apple long, the AMD long. These have just been absolute monster trades. It really has. It's been a great week. The markets are all-time highs. The best damn market environment that I've ever seen in my entire life. Way to go, my boy Jimmy. $700 profit today from my boy Jimmy. Great job, man. Really great job. Congrats. Guys, this is what's possible. This is what's possible in this environment. This is what's possible in this group, in this community, and in this platform. This is what's possible. Take a second, those of you that are on this live right now, and go ahead and answer that poll. Okay, go ahead and answer the poll. All right, those of you that are in the YouTube chat, answer the poll now, please. Gabriel says, thanks. Happy to be a part of the TTG family. We are happy to have you here. We are happy to have you here. Yeah, great trading. Exactly. Any questions? Oh, let's go over CPI. Let's go over the CPI expectations so you guys are all brought up to speed with what we're looking for tomorrow. Here's the expectations. Headline CPI is expected to come in at 0.1% month over month. That's compared to 0 last month. And year over year headline is expected to come in at 3.1. Last month, it was 3.3. Core CPI is expected to come in at 0.2 month over month. Last month, it was 0.2. Year over year core is expected at 3.4. Last month was 3.4. See, this is what I'm talking about. That CPI number, your core number is expected to not change from last month to this month. It was expected at 3.4. It was 3.4 last month. It's expected at 0.2 month over month. It was 0.2 last month. That's not inflation moving to the downside. Now, the headline number is expected to drop from 3.3 to 3.1. That's nice. But it's that rent. It's shelter. It's health insurance. It's medical expenses that are just absolutely killing consumers on the inflation side. And that's what you're going to see get factored into the core number, which takes out food and energy prices. Shout out to Jimmy Bluffett, too, from Poker Go. Jimmy, I didn't know you were from Poker Go, man. I thought you were a member. Jimmy Bluffett from Poker Go. Awesome. Jimmy Bluffett, man, welcome. Big shout out to Jimmy. Great day for you too, brother. All right, folks. So tomorrow, if we get a CPI number that is higher than expected, so let's say CPI is expected year over year 3.1. Let's say it comes in at 3.2. Core is expected 3.4. Let's say it comes in 3.5. I think you're going to, and let's say month over month core comes in at 0.3 is expected 0.2. And month over month CPI headline comes in 0.1 in line with 0.1. Let's say that's what you get tomorrow. I think you get a significant gap down. I think the gap down takes you back towards like 558 or so. And I think the market continues to sell. And I think you get a candle that looks something like this tomorrow. I think you get a candle that looks something like this. Okay, if you get the higher than expected number. And I would expect follow through tomorrow to take you back down to 550, which is the previous all-time high. And then I think that all-time high is, I don't think that all-time high is safe if that's the case. That prior all-time high rather. That prior all-time high is right here. You can see double top there and there's double top there. And then you broke above it. You got the extension, you got the follow through, right? So I think you're going to go back to this level if you get a hot CPI number tomorrow over the course of the next 2 days. So I think Thursday, Friday would be red, 2 red days in a row, take you back to 550 for the target. And eventually, I actually think that prior all-time high breaks. And eventually, I think that a bigger pullback begins on the SPY and you can probably get down into this zone. But again, this is only if you get a hotter than expected CPI number, because I think what ends up happening is you'll have a situation where the probability of that September rate cut will go down from the 70+% where it currently sits. And then people will start to get a little bit nervous that the labor market is softening and it wants a rate cut and needs a rate cut, but inflation is not allowing the Fed to cut rates. And I think the markets are not going to like if the Fed is caught between a rock and a hard place. And that would be the situation. If you were to have a scenario where the labor market continues to weaken, but inflation stays right where it is, then the Fed is caught. The Fed's caught between a rock and a hard place. They're like, well, we need to cut rates for the labor market, but if we cut rates and inflation is still where it is, then you run the risk of inflation kicking back up again, and that's even worse. So that's where the Fed would kind of be, their hands would be tied, and the markets would not like that possibility. And I think that's what would give you a more significant pullback that honestly could take you all the way back to the 50-day moving average if that were to be the case, but that would take some time. Okay. Now, if the number comes in under expectations tomorrow, you have the potential to gap up early, right? Gap up early to like 564, 565. Let's say if the headline number comes in 3.0, month over month is 0, core number comes in 3.2, month over month comes in 0.1, then I think you can get an initial reaction to the CPI number, gaps you up, extends you, and then you have the potential of an exhaustion gap as that gap up triggers a lot of profit taking on positions. And then I think you can get a situation where you get a candle that looks something like this, where you would gap up, but then close back down either underneath today's high or right around today's high. So you gap it up early, and as the day goes on, you would start to give back that gap up. And by the time you roll into the afternoon, the markets have given back the entire early pre-market gap up, and you're back to flat on the day, maybe even red on the day. And I think that is what you would get even if the number comes in under expectations. I just think we're getting extended here, and I think we're pretty damn close to a top. All right. We just got above 5,600 today on the S&P. I think we're getting stretched. All right. I think we're getting stretched. All right. So those are my expectations with regards to CPI numbers for tomorrow. All right. And that's how I'm going to trade it. Right. That's how I'm going to trade it. I'm still long Palantir. If we get the gap up, great. We'll take profits off on Palantir, and then we'll go ahead and we'll look for, stocks that we can maybe get ourselves into some shorts, because I think that gap up would fade. I'm curious to see how many people are on this live stream that are not members of True Trading Group. Can you guys just do me a favor and type the letters TTG if you're not a member? Do me a favor and just type the letters TTG if you're not part of this community. If you're not part of True Trading Group, I just want to see who we have on here that's not part of the community, guys. Go ahead and type TTG. Don't be shy. It might sound tedious for you, but go ahead, just type TTG. I just want to get a feel for how many people are on here that are not part of the group. And I'll wait for that. You guys, if you have any questions for me on CPI, we can go ahead. We can go ahead. Anything you guys want to ask me. Anybody have any questions for me with regards to CPI? Kind of the game plan of what we're looking at here for tomorrow. You guys know the positions that I'm already in, and now you have an idea of what I'm going to do tomorrow. What do I think about Tesla before earnings? Oh man, Debbie. I mean, Tesla's already had a massive run. Right? Tesla's already had a massive run. And guys, listen, just make sure you're watching this live stream live. Make sure you click on the live button down there in the bottom corner. Make sure you're watching this live. You should see a red dot next to the word live. But yeah, I mean, Tesla has already experienced a huge breakout, and you're getting into this big level of resistance, Debbie. I think that, I do like Tesla for longs now that we've broken above this massive downtrend resistance line that's been in place for the last, 2.5, 3 years. So now that you've broken above this downtrend line, I would say pullbacks into this area are good for longs against the 220s. But getting long up here after the stock just went from 180 to 265 in a matter of 2.5 weeks, I think you're absolutely chasing this move. I don't like getting into positions for an earnings release. For me, I look at earnings more of a little bit of a coin flip where We don't know what the earnings are going to be. We don't know what the guidance is going to be. We don't know what the CEO and CFO are going to say on a conference call. And I just don't feel like I have an advantage getting long or short before an earnings release. I like to wait for the earnings to actually come out. Okay. All right. And then actually go through and say, okay, do I want to be long or do I want to be short based on what those earnings actually were? But I think that, trying to be long Tesla now, I think is you're chasing the stock, in my opinion. I'd rather look for pullbacks and let it consolidate in the 250s. In past cycles, the unemployment rate tends to gain momentum as it goes higher. Do you think that happens later this year? I think the unemployment rate goes higher from where it is currently, but I don't think it goes higher at like a incredibly fast pace. I think it's just like it's what a softening labor market looks like. When the labor market softens, you get this slow little climb of unemployment. But where we sit right now is 4.1%, which historically is still a low unemployment number. If you look at the unemployment rate over the last 25 years, the average is actually over 5%. So for us to still be 4.1 is just really us returning back to a state of normalcy. When you go back to what the labor market looked like prior to COVID, you were in those like high threes. But then prior to that, in the 15, 16, 17, 18, it was pretty normal to have that unemployment rate fluctuate there in the low fours. So, I do think that we see a higher number than 4.1 before the year is over. I definitely think that you'll see a higher number than that, but I don't think you're going to get to a point where you see a 5. If we get mixed data, which part of CPI data is more important for the Fed? It'll always be the core. It'll always be the core. The core number is most important for the Fed because that gives you the number without factoring in and without considering energy and food prices, which the Fed has zero control over. Monetary policy doesn't affect food and energy prices. All right. So the Fed doesn't really focus on that because they have no control over it. So they make policy decisions really focusing on the core number. And they actually rely even more heavily on the PCE number than they do even the CPI number. But when it comes to CPI, they really do focus on the core number always. All right. So listen, folks, here, I'll give you guys I'll run down some info for you guys right now. For those of you that are not members and are interested in the TTG platform and the membership, tomorrow's going to be a big day with the CPI number. I think tomorrow's CPI number has the chance to really kind of move markets in a big way. I think this is the most important CPI number that we have had in several months. So here's what we can do. Today is last day here, guys. For the price point that we're giving you guys here of a $797 membership. You guys can go right to ttgoffer.com. There's no coupon code required. There's no coupon code needed. You go right to ttgoffer.com. Everything on that page is included in your annual membership. There is no additional cost, hidden fee, upsell for any of the things that you see on that page. You're going to get our entire 22 course curriculum. It's a simplified and expanded upon version of the training program that I went through and I worked at a fund in New York. Beginner courses, advanced courses, options, swing trading, trader psychology, crypto, you name it, we've got it. You have access to it. You get Benzinga Pro's real-time news feed, TradingView's premium charting software, the Trade Idea scanner streams on our platform for you guys to use. You're going to have 2 private study group sessions, our AI-powered trading assistant, 1,000 hours of workshops in our video library, unusual options activity, options flow, dark pool data, short data, analyst ratings, congressional trading data, a simulator from ET&A, custom scanners, social sentiment scanners. All of this is included when you join the TTG community. You can do so right now for just $797 for the entire year. Now, I mentioned to you earlier about that double your money back guarantee. Allow me to explain to you how that works. I don't think you need it, considering our refund rate is less than 2.5%, but I think it gives you peace of mind. And it shows you how much that we believe in the platform that we built. and that we have. So when you join True Trading Group, you'll spend $797. You get access to everything I just mentioned on that page. If you go through the courses, pass the quizzes, and attend one study group, and are still unable to make enough winning trades to equal the $797 membership fee, if you can't make that back at least one time during your membership, we'll give you back not $797. We'll give you back $1,594. Double what you paid to join the community. That's how much we believe in the platform that we have created. The double your money back guarantee is right there on the checkout page. It's in black and white. It's right there. Go read it. It is real. All you need to do is go to ttgoffer.com and grab that $797 price point. Everything on that page is included. We offer Klarna, Afterpay, PayPal credit. If you want to use one of those payment options, you can. If you have any questions or you're having a hard time signing up for whatever the reasons, send us a text message. We are fully transparent. We are an open book. Anything you want to know, just text us. 786-505-4049. Again, that is 786-505-4049. Text that number. Any questions you have, if you're having a hard time signing up, whatever, text that number. We'll help you guys out in any way that we can. All right. Otherwise, you go right to ttgoffer.com. Everything you see on that page is included for the $797. Price goes up at midnight tonight. All right. It's going to be a big day tomorrow, guys. Do you realize tomorrow has the potential to be the market's top? It has the potential. The setup right now has potential to be the market top. I don't really say that. I haven't said that really at all during this market rally. But the extension that I've seen over the last week and a half on low volume, without really there being news catalysts behind it, I feel like you have the potential to be a market top. We'll see. We'll see what happens. I'm not positioned for a short or anything like that right now. I'm long. So we're looking for, like I said, Palantir 29. We're looking to take that profit. All right. And we'll see. All right. There you have it, folks. Anybody have any questions for me about CPI or what the game plan is with Palantir or what we're looking at for tomorrow? Anybody unsure about the game plan for tomorrow? If you guys are not members, listen, don't try to trade through this on your own. If you have missed out on this market rally to all-time highs and you guys have not made money from it, you really got to question what it is that you've been doing this whole entire time, because obviously it hasn't been working. This is the ideal environment for traders like you and I, whether you day trade or swing trade, whether you're full-time or whether you're working a busy schedule and you have other responsibilities. This is the time and this is the environment for you guys to be making money, and a lot of it. And if you're not, you have to be asking yourself, what is it that you have been doing? What have you been focusing on? Because all of these stocks are moving higher on a daily basis and making new all-time highs. If you're not taking advantage of it, you got to wonder what the hell you're doing. And that's the truth, and that's the reality of it. What shorts are I like tomorrow, R. Hirsch? I'm going to probably continue to look at some of those software names because they've been relatively weak. And I think I might look at more like consumer-related names, because I think people, I would look to short interest rate sensitive names. If you were to get a hotter than expected CPI number. So if you got a hotter than expected CPI, then I would say biotech stocks, solar stocks, consumer discretionary stocks. I think those are the areas of the market that would be weak. Now, to the flip side of that, if the CPI number comes in light and this big gap up and you're looking for that profit-taking pullback, you could probably see some of that profit-taking, and you can probably look for shorts and pullbacks in some of your tech names, because I think profit-taking would come into some of those other names, and I think you would actually see other areas of the market be strong. You could have a situation where maybe the Dow ends up being the strongest on the day, and you have some of your staples and some of your financials and some of these others that actually would move higher on the lighter than expected CPI. And I think you would see profit taking in tech. Okay. So it's kind of, if the CPI is hot, look to short interest rate sensitive names, look for maybe solar, biotech, consumer discretionaries. If CPI is light and you get the gap up but we're still looking for a pullback, even if you get the gap up and you get an exhaustion gap, I think it's going to be an exhaustion gap from profit taking on tech. So that would mean NASDAQ ends up pulling back the most as profit taking kicks in, and the Dow could end up being the strongest during the day, and the SPY kind of sits somewhere in the middle. That's kind of what I'm going to look at coming into the morning, but we'll see how the markets react to the CPI number at 8:30 when it actually comes out. Okay. That's it, folks. Thanks for tuning in here tonight with me. Hope you guys all enjoyed the live. Hope you have a better game plan and a better feel for what we're going to do tomorrow and how you can make money from it. Go to ttgoffer.com, guys. Grab that membership for the $797 price point. Any questions, text us 786-505-4049. Smash that like button, subscribe to the channel, turn on your notifications. Make sure you guys never miss out on any of these live streams. I will see you all in chat tomorrow. Have a great